As investors, one of the biggest mistakes we can make is assuming the economy has to tell one story. This week's a great example. New data showed manufacturing activity accelerated again in June, with factory output growing at its fastest pace in several years. At the same time, housing remains under pressure, business confidence remains cautious, and hiring continues to slow. So which is it? Is the economy strong or weak? The answer is actually a little bit of both. Housing's clearly feeling the impact of higher interest rates, but the labor market continues to hold up. Initial jobless claims remain relatively low, unemployment has been remarkably stable, and we're still seeing what I've called a low-fire, slow-hire environment. Businesses aren't aggressively adding workers, but they're not rushing to let them go either. We're seeing something similar in inflation. Oil prices and geopolitical headlines have created plenty of concern, but longer-term inflation expectations remain relatively well anchored, which is an important reason markets have remained so resilient. For investors, that's the key takeaway. The economy doesn't need to be booming for markets to work. It just needs to keep growing. And right now, the data continues to suggest an economy that's slowing in some areas, improving in others, and overall continuing to normalize rather than roll over. Thanks for tuning in. We'll see you next week with more insights.